we need to create a truly pan-European affordable housing investment fund. Then we will get the European Commission new budget in 2028, hopefully it's more. We are talking about 2,500 billion.
Hi, Jaime. Thank you for joining us today. So to start, could you give us a quick overview of your background, your role at the European Commission?
I have different heads. One of them is being one of the advisory board members of the Housing Advisory Board to the European Commission. I'm also the director of the ESCP, Institute of Real Estate, and the director also with the ESCP of the Government of Monaco Real Estate, Tech and Innovation Program. I'm also senior housing advisor to the European United Nations Habitat and Government of Canada. So lots of housing and a little bit about the advisory board. What we do with the European Commission is basically discussing like the different policies and programs that the European Union can implement to make housing more affordable. And this led to the first pan-European affordable housing plan. But there are lots of new things, hopefully to be adopted as well.
Going off of that, what is the housing gap nowadays in Europe?
The housing gap is quite significant. The European Commission in the plan that was published, we estimate it's about 10 million homes that we need. So if we translate that into capital, that is about 2.5 trillion euros. And 2.5 trillion euros, it's 2,500 billion euros. It's huge. Just to give you a sense, because I think this is very important to get a sense how big this is. So the European Investment Bank budget for affordable housing is about 6 billion. We are talking about 2,500 billion. So it's a big gap. Something that was great recently after that was announced together with the first European Affordable Housing Plan was that some of the European national public banks announced a deployment into affordable housing of 400 billion. So, but still it's like in total it's about 400 billion what we will have of public money for the next 2 years, or 2-3 years. Then we will get the European Commission new budget in 2028. Hopefully it's more. But I think that's what we will have. Still there is 2,000 billion left that we need to raise in private capital. And it's very important to get the right vehicles, the right structures, and the right policies to attract private capital.
And what kind of public-private models and incentives do you think that we can have to unlock scale, since the public funding isn't able to fill that gap?
Right. It's a very important question, and that's something I'm working on a lot. So I think we need to create, and that's something I would love to also obviously to lead. We need to create a truly pan-European affordable housing investment fund. Because the pan-European Affordable Housing Fund gives you the European dimension, the continent dimension, so you are able to diversify risk. Doing like very simple numbers, I'm able to show that the risk of this type of vehicle is significantly lower than the German sovereign fund. So it's almost like no risk because there is like what is called like negative correlation across European countries. So when one goes well, the other doesn't go so well. But this is exactly what financiers like. They don't like risk. I'm thinking of this pan-European fund that does long-term rental housing that is affordable. So it's going to be seen as fixed income. And as fixed income is gonna be compared 1-to-1 with a sovereign bond. And so in terms of risk is great, but also if you do the returns, it gives you very healthy returns. You can get, I think, quite easy the 10% figure, which is very nice. And then getting back to capital, so how we feel with private capital, that fund. We know that all this public money, but we have 33 trillion euros of household savings. This is huge. This is enormous, and half of that is outside European Union, and they get very, very low return. So we need to create a structure to channel that money, that this is super passive capital, like almost with no return, and put to work in something that is social, has a social impact. And obviously we want to bring pension funds. We want to bring insurance companies, sovereign funds, because this is the type of product that they like. It's a partnership with not only potentially the EIB, but also with national governments in Europe. So it's great. There's peace in Europe. I think that they will find it low risk with the right structure.
That's very interesting. And my next question goes along that in terms of institutional investors, institutional capital, so insurance companies, sovereign wealth funds, and whatnot. For the social infrastructure, what do you think the institutional investors' expectations are in terms of real social impact and affordable pricing?
First thing is that I love the word social infrastructure. It's something I learned from my colleagues at the advisory board with the European Commission, is that if we label this as social infrastructure, we will be able to also reach out to lots of infrastructure funds to basically solve the problem in Europe. So this is something very important. What I believe is that to do affordable housing, you, by definition, the return is not the market return. That's why we call it affordable. It has to be 30% of the average median income in the municipality, and most of the times you are at 60%. So to bring it down, you need to bring down rents, and then you lose money. So the only way that you can make it truly affordable is to modify the capital structure, and this combination of equity and debt. And now with all these lines of credit, very cheap credit from national governments and European institutions that will finance, so basically you are decreasing the cost of capital. There is also some subsidies. There are some countries like Spain that has been recently approved. So there are like significant subsidies now to do affordable housing development. So we need to put together the right structure at the asset level and also at the fund level. At the asset level is getting the grants, the land for free. We need to obviously get the very cheap financing and also bring in, back to the core of your question, institutional capital that is patient, which is basically what you described.
Yeah. And then now going maybe a little bit to digital infrastructure with AI, you highlighted the trust and shared intention are crucial for investors navigating the AI age. How should this influence how investors evaluate and select impact-driven residential markets?
Yeah, it's a great question. It's a question I love because I've been thinking a lot about what is the impact of AI in society. And I truly believe that AI is gonna produce massive unemployment, or at least quite a lot of unemployment, and it's going to be unemployment, as we know, of those kind of skilled workers. A lot of that is going to be accountants, financiers, lawyers, architects. It's impacting everything we do. In that scenario, which is very likely, there is going to be, in a scenario where there is significant unemployment, there is going to be a lot of subsidies from the government, because otherwise you have a crisis, a huge social crisis. And those subsidies, I believe, is going to be in the form of a housing subsidy. It can be the subsidy directly to the supply side, which is basically developers or funds that basically invest in this, creating these assets, which are affordable, or to individuals, to households. So first of all, it's a great opportunity. I think it's a great asset, very resilient to the type of times that we are living today. And also, what we know is that with such a high productivity shock of AI, it usually brings unemployment. It would be a very weird case, but because we have more productivity but more unemployment. If there is more unemployment, also central banks will print more money to boost the economy. It creates inflation, and inflation is great for rental housing because like rents go up with inflation. So it's a very, very solid, I think, asset class. There is going to be, the fundamentals show that already there is a crisis in housing affordability, but it can be even more. So I would say that, like affordable housing, it's something that investors would like to pay attention to. Yeah.
And it seems like AI is a question for everything from real estate to all the markets. So
Yeah.
great,
Yeah.
great. So to close off our discussion here, you just participated in the housing affordability panel. What are your key takeaways and supporting the European Commission's broader goals from that discussion?
Yeah, I think it was like a super nice discussion. I enjoyed it. It was like very lively. Everybody in the room with great expertise, by the way. They were bringing like their viewpoints. It was, I really enjoyed it, and thank you for the invitation. That's the first thing I want to acknowledge. I've seen developers, big investors, everybody worried about housing. They invest in housing. They're trying to find the right way to make things work. I've seen developers that they are championing affordable housing development, talking a lot about the process, that it needs to be a good process for them to be competitive. So I think that's obviously a question. There was a discussion about industrialization, how this can help like bring down costs and time, which obviously I think it's important. I've seen a lot of discussion also on like at the policy level, national policy level, that like some policies that doesn't help, like rent control was brought on the table, and also taxation. What I added to, I think, the debate, some of the things is that we need to think not only about like the process, the technology, the policy at the national level, but on the capital structure. We need to be able to modify the combination of equity and debt. And this is where we are going to, if we are able to do that and bring like cheap capital or like grants, is what is obviously is going to make things affordable.
Thank you so much, Jaime, for being with us today.
Yep, thanks so much.